The last time Goldman Sachs mentioned this was in the late 2000s. And remember what happened with gold prices? They went up about 200%. Silver went up about 400%, right? Yeah, but when you look at an Elliott wave sequence for silver, we're seeing a massive uptrend forming and basing right now. And you can see that both in SLV and you can see that in silver as well.
Hi, Mukarram. Welcome back to Yankee Stacking.
Yankee. How are you? Great to be back.
Since the last time you and I talked on my live stream, gold and silver did some wild stuff. It started to go up. We were getting excited. Then it pulled way back. Can you kind of shed some light as to what occurred over the last month and a half?
It's been a crazy, extremely volatile, sometimes I would say once in a blue moon kind of things happening nowadays,
right,
in the markets. So that's where I think you saw a lot of the breakdown happen in kind of like November, December time, especially in the equity sector. And I want to bring back or bring the audience back to our last show, where I think you asked a very poignant question where you were like, hey, what do you think will happen with gold prices? Will they come down as equities go up?
Right.
As equities come down, just like they did before in some cycles? Or, will it be different this time? And I think that's what you're seeing, because Bitcoin and cryptocurrency has become very, very correlated with the equities market.
Hyper correlated,
which is what we said last time. We said that we think Bitcoin would drop, because that's why when we saw that double top happen in Bitcoin around 65,000 or so, we thought there would be a big drop if equities started to collapse, especially with the interest rate decisions and the Fed talk coming up. But what we noticed was gold and silver kind of held their support levels and actually went up quite a bit before the recent drop that happened about a week ago or so, right? Or even a couple of days ago, you saw with gold come down. And that was a very interesting thing to me, because this is what we always thought, that gold and silver have kind of been held back from their big run up, especially when you have other commodities beginning to run big. Like oil's gone from $50 a barrel to $90 a barrel today.
I know. I was reading an article from Goldman Sachs recently that said that we're about to start a commodities super cycle. Did you see that?
Yeah. If you look at other commodity prices, like soybean prices, wheat prices, lumber, they have gone up significant percentages in the last just 2 to 3 months, all pointing to a commodity super cycle. And here's what's interesting, Yankee, and this is great for your audience, because the last time Goldman Sachs mentioned this was in the late 2000s. And remember what happened with gold prices? They went up about 200%. Silver went up about 400%, right? From $8.50 an ounce to $49.50. I remember that because I was trading both, in the markets as well as physical metals during that time. What we're seeing is with the tech companies and with their earnings, their guidance is forward guidance is very, very bad, right? And that's why you're seeing these big, massive drops. And all this goes back to a market that has been propped up on free money for 10 plus years, valuations that don't make any sense.
Correct.
And finally, you're seeing the reality come back. Like when Netflix can drop 50% in a day, you know what could happen to your portfolio. If you have an IRA or a 401k and most of your retirement money is in the stock market. I mean, I talk to people every day, 95% of their money is in the stock market.
Ooh.
Be careful, like we've said. Now, sometimes we're early, right? I mean, all of last year we were early saying that. But when this happens and the unwinding or the unraveling happens, you can lose significant percentages in your portfolio if you're not positioned right.
Gold seems to just be stuck at this range-bound area of around 1,800, right? It drops below and it comes right back, starts to pull up, and it comes back down. When does this thing really start to move for real and make new highs?
When you least expect it, first of all. That's when you have to really understand the markets. The other thing is, and I have a couple charts that I want you to see.
Oh, good.
There's a massive, what we call a bull flag, kind of forming in the monthly charts, which are the longer term charts in gold and silver. And I actually think I mean, we don't want to get into complicated stuff here, but when you look at an Elliott wave sequence for silver, we're seeing a massive, massive uptrend forming and basing right now. And you can see that both in SLV and you can see that in silver as well, which is exciting because every time we get hit, remember, we go from 1780 to 1830 and we get hit. 1780 to 18, or 21 and change to 23 and change, or 24 and change, right? Without complicating it, I like to make sure that when I work with my clients and when I help your audience and your clients as well, I want them to, I mean, you don't have to understand the math behind it, but you have to get the bigger picture. Because when you get the bigger picture, you can see how you can position yourself. Sometimes it's very frustrating when it's building its base, which is kind of what you're going through with silver. But you can notice something that it does not take out its support levels. It does not take it out. That's because there's a lot of basing that's going on.
Will gold lead silver up, or do you think it's going to be silver that leads gold?
Well, I mean, I have to be careful when I answer this question, Yankee. Most of the time, our history has shown us that gold is always the leader in the precious metals complex. Okay, we've always seen that. But we've always seen silver outperform gold percentage-wise when it catches up. Right? If you go back to the 2008 to 2011, October 2008, both markets, gold and silver, started moving up. But silver peaked out in April 2011 after going up like 400%. Gold peaked out in September of 2011. Usually you'll see that gold goes a little longer, silver edges out first. But remember, we're in very, very different times. Everything is so different to even like a few years ago.
Oh, it's crazy.
You never know. Silver could lead the precious metals complex. We don't know that. But I'm just saying, So first, I mean, let's just address what we talked about, kind of the biggest frustrating range that we've been in, right? This is that. I mean, look, how many months have we been here? June all the way to now, June of 2021, like all, summer. This is why it's so frustrating for physical precious metals investors, because every time it wants to kind of break out, it gets hit big, break out, hit big. Now, when we're looking at gold, you'll see like the last high, remember we talked about September 2011, that was that last high, right? Which was around 1920, 29 or something like that. And then obviously you had that correction, which was within what we call a Fibonacci retracement sequence. Then you had this big run up during COVID, after COVID, and we actually broke this top, which was very, very interesting. You see that?
I do.
That's a big deal, because what most people thought, well, it'll come down a little bit and then take out that high and go up. But if you look at this in the longer time frame, this is why I'm saying physical precious metals investors have some patience, because what you're seeing here is this part is a flag that's building, and this is the flagpole. You see that? Now, this is what's called a bull flag. Now, a lot of people might say, oh, well, I think gold's going to come down because of interest rates and all that. But gold is reacting in an opposite way to what we think it should, because it went up when they talked about interest rates, going higher. If this is a bull flag and it maintains its structure, it'll break out on a monthly chart, okay? That means at the end of the month, on a Friday or whenever the end of the month is, we would like it to break out and close above these highs. You see these highs?
Yeah.
So, and these highs are getting lower and lower. So this tapering is what's telling us that something big is coming, and silver is doing the same thing, but silver looks like it's ready even before gold. Right now, it's not the retail investor who's buying like metals in like even in the futures contracts in large quantities. It's probably institutions looking at diversifying before you see more of a valuation correction in the US stock market. I'm also seeing money flowing into Chinese equities, because Chinese equities got hit big in the last half of 2021. Okay, so that's something we can help viewers understand as well.
So to sum it up, you believe that from a technical analysis, something big is brewing here.
Yeah, because you're seeing the inability to go and break through this pivot point down here, which is telling us that it wants to settle in. And 1800 gold. Right now we're at 1800 plus, like little over 1800.
Right.
I mean, that was the last time we were at 1800 plus. Outside of this cycle was going back to 2010, 2011, which tells us that the price of the metal wants to go higher. Because if it wants to come lower, it'll be at a much lower price than where it is now. And also, I think something to keep in mind is if you go back to 2008, where all this kind of mess started.
That's really when it went crazy, right?
QE1 and QE2 and all that nonsense, right? What you'll understand is since then, if you look around the world and you look at every individual who is in a position of authority, a monetary policy authority, whether it's the ECB, whether it's the Japanese Central Bank of Japan, the Bank of England, wherever they are. If you really sat down, and in a conversation with them and asked them, do you know how to fix this mess? They have no answer.
They don't.
They don't know how to fix this mess. That's why this becomes a responsibility for individual citizens like ourselves to protect our wealth, our net worth. Like I've said to you, protect our net worth and grow our net worth, because the individuals making decisions in these places, they don't know what they're doing when it comes to fixing this mess. I'm not saying they don't know. I mean, they're intelligent people, they're great people, they know what they're doing when it comes to their policies they implement, but they don't know how to fix the mess that was done 10 years ago.
I think it's the difference between intellect and wisdom. I think they're smart, but they're not being wise. And we haven't been wise for decades. We haven't been wise for a long time, and it's gotten gradually worse and worse. But I think in the last few decades, it's gone crazy. So, all right, well,
we should have you awesome. As one of the leaders of the monetary funds, Yankee.
Yeah, right.
But what I would say is if you're in the stock market, or if you have an IRA or a 401k or a stock account like that, right now is not the time to say, hey, should I put only 10% in metals or 20% in metals? Yeah. I think it's the opposite. How much money do you not want to lose?
That's a great way to put it.
And put it into metals.
Yes. What is a physical metals IRA?
Oh, wow. That's a great question. A physical metals IRA is a self-directed IRA where we set up a retirement account, like an individual retirement account. And instead of having paper instruments like stocks or mutual funds or ETFs, you can actually have the physical gold American Eagle and and silver American Eagles inside of your IRA, and that is stored at the Delaware Depository in the name of your IRA. So as the market goes up, or let's say the stock market drops and metals go up in value, guess what? Your IRA could go up significantly in value. Please get in touch with me. Yep. Yankee has all of my contact information, and my executive assistant, Nicole Rosenthal, her information as well. We will give you, it's in your
description.
In the description. You can call me directly at my office line, 949-200-7047. And I will, as soon as I get some time, I'll call you back and help you as much as I can.
Thanks so much, Mukarram. Really enjoyed it tonight.
It was always a pleasure. I love your audience. I love their knowledge, and their sophistication. Hopefully, God willing, we'll see each other again. Okay. All right.